Good morning, traders from Chicago. It's 8:01 a.m. Chicago time on the 6th of April, 2021. It is Tuesday. This is episode number 1966 as we make our way to 2,000 episodes. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to pop right over to our convergent trading pre-market summary sheet, where we see that the market posture is neutral today. We do have some products that have popped higher. Europeans were close yesterday, and they're catching up. So we're seeing the Euro stocks and the DAX leading the pack, along with crude oil and silver. May crude is trading currently at $59.71, up $1 or 1.81%. And silver is up 29 cents, up 1.17%. So currently, those commodities are pushing higher. DAX, Euro stocks, gold. Gold is up 0.46. The bonds are up 14 ticks, and the yen, the 10-year note, and the euro are up. These are all safety assets, and so the expectation here is that it is a neutral to risk-off sentiment. The laggard today is the cable, but also the Dow Jones is down 73 points or 0.22%. Again, not much. The market is pulling back, but not by much so far in the session. Volume is pretty good, 189,000 so far in the S&Ps. The overnight inventory is 90% short, so 90% of the volume falls below yesterday's close, and we have 22.25 points. The profile overall has a high tail, but it's balanced. It wants to be a B-shaped profile, but it's not. It's more of a balanced profile. We see a nice distribution with a point of control at 40.60, and that's where the market is finding its equilibrium in the overnight session. What is driving things? Credit Suisse announced that it's taking a $4.7 billion hit on that fund that had to be liquidated 2 Fridays ago. Archegos, and that's kind of putting jitters in the financial sector. Other than that, we do have IBD tip, economic data, economic optimism at 10. We also have the JOLTS job openings. This is a measure of the open jobs available in the U.S. And then API crude stock after the close at 4:30 Eastern. So that's what we have for today. It's really, we have not given up much from the all-time high. Yesterday we had a trend day up that balanced out in the 40.67 area. And remember, the balance overnight today is 40.60, just 7 points below. So we did push the high from yesterday to 40.74. So the all-time high in the S&P is 40.74. And we pushed through that 4,000, and we really did not battle that area. We kind of melted right through. My expectation is there's a lot to repair below, a lot of structure to repair below. I'll show you that in a minute. But my expectation is we're likely to pull back to that area over the next few days. So we'll see how that works out in this session. Let's take a look at what was expected yesterday. So let's throw that up here on the screen. Yesterday, primary scenario, because of the holiday, I did not expect much follow through. The primary scenario is a push to 40.50 or so, and then a pullback to 24 and sit sideways. Completely wrong. The secondary scenario is a small pullback into 40.31.32, and then looking for it to push higher with the measured move at 40.57 being the target. That was also off And so it's yesterday was a complete drive. Here's what we've got. This is the review segment. Here's what we've got so far from yesterday. Yesterday was a gap and go situation. If you recall, the high of Thursday, which is the high of last week. Remember, we did trade on Friday for non-farm payrolls, and we did push higher to 40.38, I believe. But Thursday was the last RTH day, and that put in a high for the week at 40.1450, 40.1450. And what you see in front of you here on the 4-tick Renko is that we open up at 40.38, which is basically the high of the non-farm payroll high was 40.38. We opened right at the high of the non-farm payroll, and we down ticked 3 ticks. That's it. And then we had an open drive. So we opened, down ticked a little bit, and then we had an open drive to 46.75, and then we stayed above VWAP, above mid, and started to create more and more distance between them in what turned out to be kind of obvious early, what turned out to be a trend day up. Here's the thing. There were plenty of opportunities yesterday to get long. I had a really nice setup, solid setup at 40.59. Took a while to get on anything, but 40.59 had a breakout, went to 64.25, pulled back to 59. 59 ended up being the initial balance, but there was also a breakout at 63.75 and 69 even, and so on and so forth. The thing with an open drive on a gap and go situation. So yesterday was a gap and go situation. This is and by the way, it's a gap and go situation at all-time highs. And I'm seeing people through EdgeClear, my brokerage. I go in and see the brokers throughout the day, and I look at the risk screen to see what our traders are doing, and I'm seeing traders shorting equities, and it's just, people do what they do, and I don't know what everybody's time frame is, so I can't judge. You can't judge someone's trade based on P&L, that's for sure. However, when you have a market that's gapping into new all-time highs and has an open drive on the open, it's pushing straight up on the open. For me personally, in the daytime frame, I'm off of shorts. It clears the deck for me. It clears my mind because I know I should not be looking for shorts, so I'm not going to try to find a short during the day. What would cause me to find a short? A very large impulse down that takes us below the mid, that then fails to climb back up and resume balance. And we didn't see that yesterday at all. And so what is the point here? The point here is maybe you don't make money on an open drive long only trend day, but at least you didn't lose money. Now, we're not here not to lose money. I get that. But it's better that than to sit here and short and cover for losses constantly throughout the day, because we're at new all-time highs. It can't go any higher. Well, it did. And I just want to remind you, these are the clues that we have. We have a gap zone. Look at this gap zone beneath us from 40.38.25 down to 40.14. 40.14. It's 24 points in a gap. That gap is not likely to get filled in new all-time highs. So you have a gap and go situation, and then we open, and the opening type is an open drive. You do not short that. The goal is to just find an area to lean against to get long. That's the job. That's the only job for the day. And so That's what we had. We had a nice pullback to the initial balance right there at 59. And then it started to kind of falter once it got to 40.73, and then it went sideways. But we ended up with a point of control at the top end of the range, very thin and multi-distributions in the initial balance. This is by definition a trend up day, and it is likely to continue higher in the overnight session given where it closed. It did not push and close below the point of control, below that distribution. So it is likely to push higher, and it did overnight. Anyway, I'm not here to make anyone feel bad or to tell you that what you're doing is wrong and what I'm doing is right. But I'm here to tell you to just listen to what it's saying. Listen, you're playing in an orchestra. You can't just come in and jam on your instrument. You need to play. You need to find the rhythm and play in the rhythm. Otherwise, you get booted, right? So, and you get booted by hitting your risk limits, or you get liquidated by your broker or whatever. I just want you to trade better. So, if you struggled yesterday or you faded yesterday, just heed my warning. Understand what the auction is doing. Understand where we opened. Understand what it did, what kind of an opening we had. And sure, have your moving averages and have your fibs and have your geometry or whatever else you want to use on there. That's not an issue, but still listen to price. Price is talking. Listen to price. Here's yesterday. This is Friday's non-farm payroll high 40.38, just as I mentioned, and then yesterday we opened at 40.38 and a quarter. We ended up trading below that throughout the extended hours from Sunday night into Monday's open, but we immediately went above and we remained above in what is a very prominent and obvious trend day up with some pretty good range yesterday. And so the overnight session comes in, we open up, and we immediately push a higher high. Yesterday's high is 73.75. The overnight high is 74.50. So mission accomplished. And then it starts to get some bad news, Credit Suisse and so forth. And it starts to fall back to 60. But note that it's not really moving down that far. 1 second. Notice it's not moving back that far. It quickly found balance, just 15 points below the high. This is a very strong market still. Yes, it might drop. It might drop to 4,000 from here, 60 points below. I get that. But until it does that, until it does something to indicate it's weak, I'm not seeing the weakness. Now, there are a couple things that it's showing that are weak. Those are, we are underneath yesterday's most accepted price and the point of control. So that's right there at 40.67.50. We're trading below it. So immediately we understand that there's some resistance above. It's also a magnet. The fact that the point of control is higher is a magnet. So the market might be responsive. Remember, we have an inventory, overnight inventory at 90% short or so. Let's take a look at what the latest is. Pull up this chart. It's bounced out a little bit. Well, it looks like 70. Oh, this is static. 1 second. Yeah, 92%. There you go. So 92% short. So there's a pretty decent chance for it to come back into balance, back into the 40.67. That's going to be my primary scenario, of course. We are fighting the full session mid. We are entangled in the full session VWAP, which is on top of the full session or the overnight point of control currently. These are all tangled together. So there's balance here. So it's likely to be a choppy-ish open, but the expectation is it's likely to respond higher or buy on the open. So I don't know why I'm leaning into the camera like this, like I'm preaching, but I'll relax into my chair a little bit. But it's pretty exciting. There's a lot of action here. The low of 40.52.25 is against the mid-century figure at 40.50. This is an area that we're likely, if we get down into the overnight low and take that 52 quarter out and push through the 50, you can see the 50 generated a little bit of volume down here. This is important to note, but as soon as it gets below this 50, we are likely to see a run for 38 relatively quickly. So I'd like to see that because it creates a quick opportunity to make gains there if it does. Here's the composite. Let's get rid of this profile from last week. Here's the composite. One thing I want to point out, so let's look at the action clean. As I pointed out yesterday, the market is ripping higher. The delta is still ripping lower as the market pushes up. It looks like hedges or something are hitting the bid on the way up and protecting assets probably held elsewhere. So far this week, so we started the month right here on Thursday. So you can see that it went from light gray to dark gray. We started the week yesterday, and we have a point of control up high, up on high with a big gap underneath. This is a big gap zone here. So there's some structural issues underneath the current action. And what does that mean? The market, if you have a nice base, so we've had a good base here, the 39.38. Remember that 39.38 to 39.45 area, all the way down through the 37.20. This creates a nice base. What you have here is people interacting, participants interacting, trading against each other in a range. The shorts are betting that it's likely to fall out of the range. The longs are betting that it's likely to go up. And what happens is it breaks up. And because there's such a big base and a lot of participation, there's quite a bit of volume in that range there. It creates a good structure to build a rally from. And that's good structure. When you don't have good structures, you have a trend day up with very thin volume, and then it gaps and it continues to trend up. Not very good structure because it runs away so much, it becomes stretched. And it doesn't mean that it's likely to come back or it's going to come back today. But what it means is if it does turn, the process of it turning around and falling is likely to be quick. So the shorts are likely to pay out quickly, which of course we all love as traders, a quick payout. And so pay attention to the fact that below that 52 or 50 area, it's thin air underneath there. And then we get to 38, and there's even more thin air in the form of a gap. It's a completely unauctioned area. So when it starts to sell off, what do the buyers lean against to defend their position or to hold tight those positions? It becomes a precarious situation for those longs. So it's easier to just let go of the trade, sell the position, and then wait for it to move back into an area where you can actually lean against something. And that area where we can lean against something is right down here, right in here. Look at these points of control. Point of control there, point of control there, point of control there. Good volume areas. Where are we? 39.45 to 39.50. That's 100 points below. Look, I'm not advocating to get short today. Don't mortgage your house and get short your entire account or whatever. I'm not saying we should get short. Just be aware of the narrative and the big story so that when it does roll, you're able to hang in there. And so that's where we stand. We've broken away, and that's where we are. Let's jump in. I know I've talked a lot. There's a lot of structure here that we're dealing with. Let's move on and look at what's expected for today. So let me set up this chart. Okay, so here we go. These are the gray areas for those people who are new here. These gray lines are what are called stock zone levels. Stock zone levels are pre-identified areas where the market is expected to have a reaction. We don't know if it's it marks a bottom or a top, or if it's a pause area. We just expect that the market is likely to have some sort of a reaction at that level. These are stock zones, or some people call them decision zones, or areas of interest, points of interest, things like that. So based on that information, 1 second. Based on the overnight inventory, based on the fact that we are at full session mid, based on the fact that we are at full session VWAP, and based on the fact that we are on top of the overnight point of control, I'm expecting a relatively choppy open. I'm looking for responsive buying into the 67.50. I'm expecting it to battle the 67.50. I'm looking for it to release to the downside a little bit, get through the 52 and the 50 quarter singles. Looking for it to hold steady at the 50 quarter singles and come back in. I'm looking for a rest day today. I'm looking for the market to take a breather. The market generally doesn't sprint very far before it starts to take a bit of a breath and to balance out a little bit. So today is expected to be that day, although Tuesday is usually not a good day for a breather. Tuesdays generally are one of the highest range and volatility days of the week, statistically speaking. The secondary scenario is we open up, we move away, we retest the slow down into the 50. We farm a base, come back in, come into the overnight point of control, hold steady, and start to roll over and start to re-examine our levels down below. 38 becomes the target below 50, giving us about 12 points of range for maybe 4.5 to 5 points of risk. Pretty good R factor, and takes us into the gap. And if we do breach the gap, I'm looking for the gap mid at 40.26 to be tested before we bounce right off. So 40.26 right down here becomes another piece on the map. We also played a lot in the 24 and 20 area. So I'm expecting decent support in this region if we fall. So I'm looking for support. Hey, look at that. I'm managing to write support. I'm looking for support into that 24, 20 area. I'm looking for that to provide initial support if we do drop. My preference, not that the market cares, my preference is that it does drop so we can go and retest the structures, the weak structures below, and put in some volume so we have some pretty solid references going forward that we can lean against and trade against. Anyway, I hope you picked something up here today. I hope you're learning as you move along. Make sure you have a plan and make sure you're trading with your risk controls in place. Make sure your broker has limits for you and keeps you out of trouble. And make sure you don't use $500 margins or $50 margins on the micros. It's insanity to do that. And then we'd want you to train in a sustainable way and with a plan. And the plan is to identify the areas you want to interact in, identify the setups that would trigger your trade, and then just let the market do what it's supposed to do. Always mind your risk first. Again, derivatives are not suitable for all investors because of the leverage, and the best you can do is de-lever so you can be here a while. Good luck, and I hope you learned something today. Take care.